We've just witnessed one of the biggest liquidation events, specifically in the altcoin sector yesterday over the last 24 hours at 1.71 billion. This is in fact one of the largest liquidations that have ever been seen. And of course, the majority came in on the long side with 1.52 billion over there. And that may be a lesson for many people, of course, in high leverage trading, right? This is possibly, partly the reason why we've had this massive liquidation event. However, it's not the only reason. We'll go through a whole bunch of different things over here in today's show. Make sure you do smash the like button, hit the bell notification, and subscribe to the channel. If you do look at the top of the screen over here, you can see that the 24-hour long to short ratio again is still in favor of the, in favor of the longs, because typically you don't see these disparities between the two for too long. Usually it will come back to parity. Right now, 51.34% to 48.66%. So a whole lot to look at in today's show. It should always be expected that as the market cycles progress and become bigger and bigger, you will continue to see these record-breaking numbers at 1.71 billion there in terms of liquidations. Later on in the cycle, you're probably going to see $3-4 billion worth of liquidations even in a single day. And that's just the natural byproduct of the crypto markets market cap going up higher and higher, right? It's more, I wish that this indicator actually shared this as a percentage of the current market cap at that particular point in time, because that would probably give us a better indication as to percentage-wise, rather so how many traders are actually getting liquidated in the market. So you can see mass selling over here. It actually did come through on Coinbase. There was huge spot selling specifically. And if you look at this analyst over here, LTRD, he basically went through how essentially this was a strange sequence of sell orders which came in on Coinbase, and that basically created the forced liquidation specifically in the leverage market. But the market is bouncing back very, very quickly. So in today's show, we'll discuss whether the worst is over or are we yet to see another flush towards the downside. So a whole lot to look at in today's show. Again, smash the like button, hit the bell notification, subscribe to the channel and all that jazz. If you look at the daily time frame, daily is still definitely down heavily. Weekly, half the coins are down, half the coins are up, and the monthly, everything does still remain. So long story short, you do have a weekly uptrend which is still intact. And I mean, when I show you on the Bitcoin chart, there's hardly been any change in the Bitcoin price. It's more just the altcoin sector that's been aggressively hit. So we'll look at Bitcoin, since Bitcoin does lead the rest of the market, and we'll determine where the major levels of support are. We'll then also look at the altcoin sector as well to determine how far things have come down and whether they are going to go down any further. You can see in terms of our trades, every single trade is still open. Everything is safe over here in terms of the positions that we do have on the table. We're still up hundreds and hundreds of percent on these trades. This is, of course, part of the reason why we enter into these positions a lot earlier, right? To make sure that we are as close to invalidation as possible when taking those trades. So all positions do still remain intact. You can see over here, render still up $10,000. And this is part of the reason why I said I would remain personally long in my personal portfolio. I'm not going to be looking to short the market every time there is a potential local top. There is still no local top that is confirmed. By the way, we'll get into that in a minute. But nevertheless, it is a good reset within the market. You can see the fear and greed, of course, coming down. Just a couple of days ago, the fear and greed was in extreme greed, trading up at that 88 mark. And now it's, of course, come down to 76. So still in the greed zone, but at least it's not in the extreme greed while we lead into the December break that much of the world will be having, right? December means low volume, a lot of people close shop, and ultimately prices then tend to soar in that environment, right? Or they could also dump, but most of the time, historically, we've seen prices soar over the December period, especially leading into Q1, which I'll show you in just a minute's time. So you've had a very healthy reset. If you do look at the weekly scale on the crypto market caps RSI heat map, this shows all the various different coins in terms of where the RSI is. And you can see the RSI has come back down towards that neutral zone, and the neutral zone around that 50% level. Most of them on average are trading at 55.83 in terms of their RSIs. That is a healthy reset zone. This is usually where you see things reaccumulate and then prices again trying for the upside one more time. So we'll talk about what bulls need to do to defend price action. We'll talk about what bears would be looking for to send prices lower. There's actually a poll where you can vote in the comment section below. I'd love to know your thoughts. Where do you think things are going next? higher? Are we going lower first, then higher? Or are we going higher and then lower? Or are we just over and going much, much lower? Let me know in the poll section. Vote over there. Put your vote in. I'd love to know what you guys think. Here it is on the top over there. Click on that over there. You can see what the majority of the votes are right now. But cast your vote. Put your vote in. It seems like the 45% believe higher, 38% believe lower and then higher. And then I guess 0.3 and 4, which is about 17% of the market seem to think it's all over, right? It's over. We're either getting a dead cat bounce and then heading lower, or we're just going completely lower. So with that being said, resets over here on the RSI heat map. We'll look at this and a whole lot more. I do also want to focus on the liquidation levels, specifically the delta. They were, of course, in a trending move long, meaning that the majority of the market deltas were positive, meaning most of the liquidity would be taken if the market makers drop price towards the downside. And that's exactly why you see that, right? This is why you see these $1.7 billion worth of liquidations. That is because the majority of the liquidity for the taking was on the downside. But now you can see a notable shift, right? If you're looking at Bitcoin over here, Ethereum, you're looking at Solana. Look at how negative Solana is over there. You're looking at NEAR, very, very negative as well. WIF, very, very negative over there. And then you have Pepe as well, flipping from what was previously positive to negative deltas, which means that max pain in this instance would be if it were to spike back towards the upside. And that's because a lot of the market are obviously short right here, with 51.34% over the 48.66, which are currently running longs within the market, right? So we've seen this story before. This is completely normal. I understand for anybody that's new here, they might be feeling, extreme emotions and stress within the market, and that could go both for whether you are long or short, right? You might feel extreme euphoria if you're hoping for low prices, and you may still be wanting prices to come even low, but we'll talk about it in today's show, how much lower you could potentially go, if even so. And if you were, of course, only entering into the market with your entire net worth a couple of days ago, well, you're probably extremely stressed and depressed, right? But if you look at this chart over here, we've seen this many times before, right? As 𝗕𝗫𝗓𝗓 says over here, this is how December 2020 actually played out. We saw a 30% drawdown in the others chart. Others refers to the altcoin sector, before leading into 3-month long rally, which gained 400%, right? And right now in this cycle, we just saw a 25 drawdown, right? So there it is, 30% drawdown. This was the 30% drawdown in that pair, just from that candle down to the bottom, 28%, and then price ripped 433%. So we've seen something very, very similar right now on others, right? Others specifically got hit pretty hard with a 25% drawdown because people are going further and further down the risk curve, trying to get into altcoins as soon as possible before the big rotations take place, right? This is why you have to have a plan and a strategy. And oftentimes we talk about that pyramiding into positions, right? Where essentially, I'll quickly draw it over here, where you pyramid into positions like this. If that is the intended area that you want to get into a trade. So let's say this is where your support is. Your support is over here. You pyramid into the position. You take smaller positions at the top and you grow them bigger and bigger and bigger as they approach the bottom over here. And this is partly why you're seeing my trade account looking like this, right? Still everything completely up, 10 for 10 trades, all in profit over there. And I'm currently building one right now using this pyramid approach, which I'll share with you in just a minute. This is on another account. So we'll get to that in a moment. Anyway, with that being said, should you be fearful? Should you be fearful that we're going to go down lower, or could we actually play out the same scenario where others has put in its dip and now it's going to be the 433% rally, which we saw in the previous cycle? Well, you can look to the data, right? You don't have to always take my word for it. You can simply look to the data. It's not to say that history will always repeat, but it does so very often rhyme. And what we've seen history suggest is that for Ethereum, which is really the blue chip altcoin that tends to lead the entire altcoin sector, it usually has its best returns actually in Q1, right? So Q1, which is coming up next year, Q1 are the best returning times for Ethereum, specifically with both January and February putting in massive runs, January being the biggest, right? So you can see over here, on average, Ethereum putting in about 23.36% in January. And typically, if Ethereum is going up, that's the green light signal from the rest of the market to suggest that altcoins are where it's at and altcoins are where you should be exposed. So the question is, again, today, is this an opportunity, right? Your next decision could make or break your crypto portfolio. If you make the decision to exit everything over here, there is a chance that prices run up higher. And if if you make the decision to buy the dip over here, well, this is probably a good opportunity, but you probably have to be very, very quick, right? If you look at the cycle again, I do just want to remind you, we're currently following the purple trajectory over there, which means everything is exactly according to what we would expect. It's following exactly like it did in the last cycle in 2021, as well as the cycle before that, which was 2017. So I think that when you start to go really parabolic, like we saw occur around that 750 to 800 day mark for the previous cycles, which to translate that to a time period or a date, that would be similar to around March next year. That's usually the time period where you maybe want to take a little bit of profits, and then you could lead into around that 800 day mark as the sell in May and go away time period, and then you tend to lead to continuation higher for the rest of the run, right? So so far everything is following to plan. You do also have some massive things coming out. 𝗕𝗫𝗓, the founder and previous CEO of Binance, he says probably nothing over here posting this. Russian lawmakers propose strategic Bitcoin reserve, right, to counter geopolitical challenges. So you are having this space race-like scenario with crypto where nation states are possibly going to start creating these Bitcoin strategic reserves, where they, just like gold, right? They create strategic gold reserves and they store value and wealth over time in gold. They might do exactly the same thing. And remember, all these nation states have money printers that can continuously print for free, right? There's not really any consequence over here. They can continue to print, put the money into Bitcoin, and basically just buy up as much Bitcoin as they want. The chart will still show us what plays out in the end, and I still believe that we'll follow the cyclical path. I'm not necessarily someone that subscribes to no more bear markets. I just think that we're exactly where we were before, and you're going to see more and more of these headlines coming out, and possibly even getting closer to the implementation date of these nation states bringing in the strategic reserves right near the peaks of the cycle, right? So far, everything's still following according to plan. In my personal opinion, nothing really has changed over here. We can quickly move this along over here and just see where Bitcoin is at on the high time frames. So here it is. There's Bitcoin. This is what I'm talking about when I say when you zoom out, it's almost as if nothing even happened. It's just another day, another week, just like every other week within Bitcoin's history over here. But again, touching on what we spoke about yesterday, we said that if in fact you do 100% confirm that this is a local top, and in order to confirm this is a local top, of course, prices need to drop significantly more. And by the time they've done that, by the time you've confirmed it's a local top, well, you would already be positioned to buy the dip, right? So where would the levels come into play? Well, the most significant level is going to be that 50% level right over here, which lines up with extra confluence of the 21 exponential moving average rising, and that lines up over here at this $77,298 zone, right? So major support. If you do end up getting a big flush for Bitcoin, that's truly your buy the dip spot, right? This is your prior range high breakout level as well. So you have added support over there. Point being is there's tremendous support, and you've had a series of high highs and high lows. So that would be yet just another high low in the making, right? So you don't want to counter trade the high time frame trends, this being a weekly trend, which is clearly powerful and strong towards the upside. Dailies are a different story. If you're a leverage trader, it's a different story. Of course, if you're a leverage trader, you need to exit the market very, very quickly if you start to see any signs of a potential local top. But if you're a spot trader, meaning you're just holding the underlying asset, you're just simply buying Bitcoin, Ethereum, Solana, Render, whatever the coin is, and you're just holding it in your wallet as a simple, strategy, then you don't need to do those types of things. So looking quickly at the daily time frame to just line that up with the weekly, there's your 21 EMA. That lines up, of course, with the same levels over here on the daily time frame, which is going to be that 50% level. That's coming in at $76,000. I will remind you on the CME futures chart, there is a CME gap, which is formed right over here. So if you were to hit that level, well, you'd be filling the CME gap. The CME gaps trade on the futures chart. Remember, futures markets are closed over the weekend. So the way these gaps are formed is if you, for example, have a Friday candle that looks like that, and then over the course of the weekend, some major bullish news takes place in this environment where the circle is, and then Monday the markets open and prices open higher over here and continue to catapult up. That creates that gap in the chart, right? It's not showing on this because I'm on the spot chart right now, but nevertheless, the CME futures gap is over here. They fill a very, very high percentage of the time. time. I think as high as 90% of the time, those gaps will fill. But sometimes they're left there as a little bit of a temptation for the bears, right? They get left as a temptation for the bears, thinking that you're going to come this low for price to sometimes run, for the rest of the bull market. Maybe Bitcoin finishes at $200,000. And then in fact, you do fill that CME gap, but only in the bear market within 2 years' time. So please do be careful of that, right? Those are the major levels of support. That's what we're working with. The other thing that I'm paying attention to over here is the RSI. You can see the RSI coming down towards the yellow dot that I put on the screen over there. That's your 50 mark. Now, similar to what I showed over here, a lot of the market has reset with the RSI is coming back towards the 50 level. We've commonly seen this, that 50% level acting as a major zone of support and bouncing prices higher. This works for momentum oscillators as well, and not just the candles on a chart, right? So we've seen it before. If you look over here, you can see that 50% level tested within this region over here. Price obviously gets sent. We saw the 50% level get tested over here. What happens to price? Holds as a high low, and price obviously continues towards the upside. So we'll keep an eye out on that as the RSI trends down. In order for the RSI to get down to that level, you might see price come a little bit lower, possibly as low as about that $85,000 mark. And then the RSI is going to hit the 50% level. And that's what I'm talking about, possibly front running that CME gap and not actually getting as low as that. At the end of the day, bulls are in a game of survival for at least another week, as we do still have the presence of the bear moon, right? So a little bit of pressure for the bulls to continue to withstand price. If they can hold things up for the next couple of days, we'll position into a bull moon. And we've seen how it's worked many, many times before, simply for the fact that it controls human emotion, right? The moons affect the water in your body. It controls your emotions. And consequently, people feel more optimistic or more fearful at certain points within the market cycle. So we're continuing to keep an eye out on that. If you look at the 4-hour chart over here, you can see, and this is unanimous across the board, a lot of the coins swept below the previous month's open, right? So, or excuse me, not the previous month, this month's open, where the opening candle occurred for the month. We swept below, but immediately reclaimed above, right? We saw the same thing over here on Ethereum, right? Swept below the monthly open and immediately starting to reclaim above that monthly open. So this is going to be a signal for strength if you can see bulls continue to hold above the monthly open over here. And more specifically, the real level to take out is going to be the previous month's high, which you can see is lined up just under that key $100,000 mark. Going back to this chart over here, I'd also want to show you your RSI will start to trend up as well if price is able to get above the yellow line, which is also around that $100,000 mark. So confluence of the previous month's high, confluence of the RSI pivot level, that's the level to reclaim. If you are fearful and you only want to get back into the market when, there's confirmation that things are healthy again or strong, I guess that's what you're waiting for. You're waiting to reclaim that key $100,000 mark for Bitcoin, right? So here's your chart. Again, just lining it up to give you some perspective specifically on Bitcoin. You have a lot of confluence over here. This is your major support level. You have your 200 exponential moving average, which is rising. We have the level that I spoke about, over the last couple of days. Whenever you see these big wicks over here, right, there it is. You anchor from the bottom to the top of the wick. You measure out the 50% level. And what do you know? Price comes exactly into the 50% level and moves towards the upside. So we did speak about this. We said, however, I wouldn't hold my breath on it because it's not always that you're going to see price come back similar to a CME gap. Sometimes it happens, sometimes it doesn't. But nevertheless, the level was drawn in over there. You hit it to the T. Price bounces up, starts to reclaim, back to where it was previously. And now we need to see what happens next, right? So again, the area of safety comes in play. If you break above this breakdown area, that's what led to the breakdown. What I would expect now is probably for price to continue to range for a little bit longer. So you're most likely going to see Bitcoin on the lower timeframes create a new trading range, possibly between this $96,000 and $100,000 level, maybe squeeze in, create a little bit of a wedge, right, as everything tightens up like that. And then later on, when we print the bull moon, as you reach the apex of that wedge, likely you break towards the upside. That's probably what I'm looking at over the next coming days. We'll continue to monitor price action as everything unfolds over here. The point is, this is probably going to be one of your final opportunities based on this sell-off to establish your positions, right? So remember what we spoke about. We said, watch for the mid-range. When you approach the mid-range over here, you might get a spike up in Bitcoin dominance. The spike up in Bitcoin dominance following the break of that falling wedge will often lead to, or it will often occur under the condition that prices were coming down, right? So in a fearful environment, people move from altcoins back into Bitcoin. That creates a spike up. And I told you, this is the part where you don't want to mess it up, right? Because as per our little LARP line drawings, which we already drew ahead of time, we said what most likely happens next is following that next spike up, you put in some sort of a back test into the falling wedge, testing it as underside resistance, which is currently what it's looking like, right? You got the underside resistance over here from those candles. And then you're going to set in the lower high. That lower high would have been your opportunity to reprice into the altcoin market for the next leg down, right? Which creates the big pumps. This is so far the case. Of course, we have validations and invalidations. The incorrect thesis on the bullish case, so meaning you're wrong, would be if you, of course, start to break back up into this 60 mark. Then you can consider this a massive, massive fake breakdown over here on Bitcoin dominance. Bitcoin dominance gets back above and rallies one more time higher. And that will absolutely wreck the altcoins terribly. It will wreck the altcoins. But right now, we say that's the less likely case, right? If we look as well at the USDT dominance, it's pretty much putting in a similar picture to Bitcoin dominance. Bitcoin dominance down equals altcoins rally, right? USDT dominance down equals altcoins rally. When Bitcoin dominance bounces, altcoins get a little bit hurt. And the same is true on USDT dominance. When USDT dominance bounces, altcoins get hurt, and so does Bitcoin, but altcoins get hurt worse, right? The point is right now you're coming into, similar to Bitcoin dominance, your underside resistance, right? You can see how you perfectly tested into that level. I've just extended a bit to the right for you now. See how those wicks have formed. Again, we drew this way ahead of time, looking for, if you did even get the spike, there were two alternatives. We said, one, you just continue to grind into this level and then lead into a massive breakdown. Number two, you do get some sort of a spike up, set in a lower high, and then following that lower high, you break down. Now you need to be on lower high watch, right? Again, just like with everything, there's always a validation and an invalidation, whether you're long or short on the market. Where are you wrong on the idea, right? Well, if I had to see USDT dominance reclaiming back into this zone, around this 4.34% zone, and holding multiple candles within the zone over here, that would be a very, very strong signal that we're probably putting in a major local top on Bitcoin, not a cycle top, but a local top. And that therefore crypto is going to go down a lot lower, right? So that would be the level to reclaim. And the reason why is because you do get fake breakdowns sometimes, the same way as you get fake outs towards the upside, you do get fake breakdowns. Remember, this is a very, very long-term trend line for USDT dominance. And the vertical lines, which mark up with when it's tested this yellow trend line, have actually marked the top of Bitcoin at each point in the cycle, right? Whether a local top or an absolute cycle top. So it is definitely something we need to pay a lot of attention to. But what is on your side if you're a bull is the timing factor, right? Remember, nothing has changed over here. Nothing has changed, right? Of course, if all of these bearish signals and things were happening when timing-wise we were nearing the 1,000-day mark, measured from the bottom of the market, which would have been the FTX collapse, as well as the bottom of the bear market of the previous cycles, 1,000 days later, all of this was happening, that would be a very, very worrisome sign. But the fact that we're sitting at around that 750-day mark suggests that, we're just over halfway through the crypto cycle timing-wise. And I have personally found that timing is sometimes more important than looking at Fibonacci extensions or other forms of trying to determine how high or low price may go, right? The timing is often one of the most important factors to look at. So with that being said, we'll talk about the altcoins. It's really important that you keep a grasp of your overall portfolio. I'll plug these guys because they're great. One thing that you can do is get an account with CoinStats. As you can see, they're giving a 50% discount. So it's $7 per month on the yearly plan. I think it's great value for money. Remember, this is a portfolio management platform where you connect every single one of your wallets. Why is this important? It's important because on days like today are the best chances to where the whole market comes down to make your swaps, right? To switch in and out of positions that you didn't want to have. And the only way you would know that or what to do is when you understand how much money you have, right? Where is your money situated? Which positions are down? Which positions are up? So there is a link in the description below for those of you that are interested. Go through to CoinStats over here, get your 50% discount. I think it's money worthwhile spent. Personally, it's one of the best crypto products that I've found, right? So why do you want to have your positions set properly now, right? And not next week or in 3 weeks or a month ago? Well, the thing is that you still have ETH BTC all the way at the bottom. I've just showcased to you where Bitcoin dominance is. If this is going to set in a lower high, this becomes the prime time opportunity to reshuffle your portfolio and perfect it. Because we always get new information, right? Based on that new information, we're able to see, what should we shift? What has not performed as well as we wanted it to, and what has shown signs of strength throughout the cycle. And following these sell-offs, you should be able to see which things are rebounding first, right? So there it is. Again, 𝗕𝗫𝗖𝗟𝗨, sign of strength. This is an ETH beta play, one that we've spoken about a whole lot, right? This is, if you don't want to trade on leverage and be one of the statistics that fall under the 24-hour liquidation levels and get listed on the, I'm going to call it the wall of shame, right? Do you want to be on the wall of shame, the liquidation level wall of shame? Or do you want to get the upside volatility without getting liquidated because you're a high leverage degen trader? Well, if that is you, then trade things like 𝗕𝗫𝗖𝗟𝗨, right? You look towards the chart over here, you see ETH BTC is bottoming out. You see that ETH USD on a weekly scale has just had another perfect back test into mid-range support over here. And what do? You buy support and you sell resistance, right? Cool. There is, of course, the argument to be made that you have a little bit of interim resistance over here on the ETH USD chart, which is coming in at the range quarterly. Why is it the range quarterly? Let's quickly label it, right? You have your ultimate range high over here. You have your range low over here. You measure the midpoint, the yellow line over here is your mid-range. And then you take the difference between the mid-range and the range high, and you get another midpoint, and that's your range quarterly. So yes, you rejected from the range quarterly. But if you've been in whale room for quite some time, you'll know what I say, that remember you have your premium zone and you have your discount zone. What I'll do is I'll label it in different colors over here to make a little bit more sense of it, right? So this is going to be the one zone, that is your discount zone of the trading range. And then this over here is going to be your premium zone. Now, what you typically want to do is you want to establish your positions. I should actually swap these around. Let's make that one red and this one green, because green is for buying and red is for selling. In your discount zones, you want to be establishing positions, right? You want to be buying as close to the range low as possible and when things are on discount, and you want to be taking profits in the premium zone. So remember, these levels change. At one point, this was the discount zone, but we've left this trading range. We've successfully, in my opinion, transitioned into a new trading range on Ethereum, and that new trading range is here with the line in the sand around that $3,500 mark, right? So the closer you buy to 3,500 on ETH, is probably going to be the newfound floor, the newfound discount. And then when the market breaks out and ETH probably catapults all the way here towards the first target level that we have at the 1.618, which would be $5,126, what you're going to witness is you'll probably start to witness the ETH BTC chart, which we've spoken about for many, many months now, breaking out of here, right? As ETH BTC breaks out of here, you definitely want to be positioned in the right coin. So again, you can go through to something like Banter Bubbles. You can have a look at, which are the first coins to be popping here. So Beam is showing signs of strength over there. 𝗕𝗫𝗖𝗟𝗨 is showing signs of strength. These are some of the coins, right? You can look on the hourly. Let's have a look on the daily. Okay, Move is up, Ondo's up, Hype is up again, SOS. Some of these are new Hype, SOS, so I'd probably leave those. And then go through the list, right? Look at what's in the top 101 to 200. Go through to 201 to 300. Scale through. Look for what is coming out of the gates first. What comes out the gates first has relative strength and will probably continue to outperform for the rest of the cycle, right? And that's the point. That's the point of why you want to have a portfolio manager, so you can make those switches. Then you can look on your portfolio and see, what's down, what's been struggling. Let me cut it and move it on those down days immediately into something that has shown relative strength. All right, let's have a look at the total cryptocurrency market cap, total 1, 2, 3, as well as the others chart, as well as total 3 measured against Bitcoin and others against Bitcoin. And what we can see is this, right? Again, zooming out, the breakout is real, huge cup and handle formation. There is going to be pullbacks. We spoke about how it would eventually come. I covered yesterday, 1, 2, 3, 4, 5, sixth candle pulls back, right? We said usually it's somewhere between 7 and 9 candles. So we haven't closed the week off yet. Total could still end up closing as a green candle. And if it does, you can imagine the euphoria that will jump back into the market next week and the week afterwards, right? So far as it currently stands, total looks okay. This is where I said I would have placed my stop losses on the total cryptocurrency market cap at the yellow line over there. We didn't get anywhere near that level. It's still holding up. Total 2 as well did pretty much engulf yesterday or last week's candle. This is a weekly time frame, but let's see how the week closes, right? I showed you as well in yesterday's show how in some of the other cycles we did see where you had this massive engulfing followed by prices, of course, running up higher for the rest of the cycle. So that's still a possibility. Total 3 was coming slap bang into resistance over there. So getting a rejection or pause off of that. Remember, working out level to level, you can take it from the previous range to the new range, and where you're actually at that mid-range level, the range quarterly are still holding up. That's where last week's candle found support as well, and we're still closing above there. So if we're closing above there, it's a sign of strength for the market. Okay, here's your total crypto or others, others is excluding the top 10 on CoinMarketCap and CoinGecko, and only going from number 11 further down the list. Yes, this one got hit, right? This one got absolutely hit over here. Look at that, a 25% sell-off in just 1 week, right? So huge flush. That's responsible for the majority of those liquidations. These are very, very high leverage perpetual traders jumping in late to the market, trying to attempt to make up for lost opportunity because they came into the market late. I know that's not you guys. You guys have been around for a long time, so I think you guys are fine. End of the day, still bullish, right? Still bullish on the high time frame. Huge cup and handle formation, breaks out, back test into the neckline over there. It's fine. Everything looks okay for me over here. We just want to continue to see prices close above these key levels. So for others, I'll speak specifically about others because that is where the main opportunity does lie in the altcoin sector. So that's the level. You just want to continue to close above this zone over here, about 350 billion. And then your targets for this are going to be at least into the trillions, right? Others probably runs into the trillions, seeing huge gains. Now, what's interesting is specifically if you look at total 3 versus Bitcoin and others versus Bitcoin, and this is what we're looking at, right? First, we were looking for the break of structure. We got it, right? And then I said a couple of weeks back, I said, there is a chance that you might get a throwback into this, and that would be a golden opportunity for those who are feeling the FOMO who have been left behind. Now you've got that, right? You got that. There was no guarantee this was going to happen. Sometimes these parabolas, you never know how high they can go. In this instance, it gave up the gains quickly, came back to the break of structure, testing that. So similar to the others chart, of course, holding up this key level over here. We do want to see others against BTC also defend and hold this level, start to form a little bit of a higher low, and then run it, right? If you look at, that's total 3 against others. If you look at others against Bitcoin, well, very, very similar, right? Break of structure, throw back, hold this level. You could get 1 or 2 wicks that, scam a little bit lower over here, maybe to the 0.18, maybe come down to 0.17 if you get one more flush down. If you do, again, this is the opportune zone. And then we're looking for the high low to be made. It's going to take a couple of weeks, right? For sure. Take a few more weeks to actually confirm that. So that's what we're looking at in the altcoin sector. We'll look at actual altcoins in just a minute. Again, guys, if you appreciate the analysis, it always helps. Smash the like button. Let's have a look at the also the stock markets, right? So stock markets, they've been closing at all-time highs, incredibly bullish. Of course, there will also be pullbacks here along the way. You do have interim support levels coming in. This is for the S&P 500. That's going to be your first major level. We'll take it one step at a time. We'll see how, because this is a daily chart, let's see how the next couple of days play out. But that is your first level of interest. That will be for the S&P 500 around that $6,000 mark, right? Big psychological level to hold at 6,000. And this one over here, we have around that 500 mark. That is QQQ, NASDAQ. 500 mark, also significant to hold. And then looking at, let's just move on to the daily over here for the Dow Jones Industrial Average. So here's a prime example of a CME gap as well, just for what it's worth. There it is. Gap has not yet been filled, right? We came very, very close to filling it, but that CME gap has not been filled. That's one area of interest. The other area of interest, of course, is going to be just above that, those previous tops over there. So as this comes down, watch for support at 43,300. For the Coinbase chart, also pulling back, giving you another opportunity, yet another opportunity. This is going to be an order block. This will definitely be an order block that's going to lead to a higher move up. So if you want exposure to Coinbase, I've heard actually many traders as well, people who I actually respect as traders, even imply that Coinbase is a better opportunity than buying Ethereum on the open market, right? It gives you that, that volatility that the rest of the altcoin sector will experience if it does well, but you don't really have to pick a needle in a haystack to try get the right altcoin, which is nice, right? You'd have to have a brokerage account to buy this though. If you do want to trade any of these things, right? The stock market, S&P 500, futures on crypto, commodities like gold, oil, etc., any of that stuff, forex pairs, there is Prime XBT. There's a link in the description below. You're getting a 20% sign-up deposit bonus. So you put in $1,000, you get 200. You put in 10,000, you'll get $2,000 to trade with for free, right? Or you can opt for the 25% off of all trading fees, which adds up over time. So for any of you that are looking for that, there's a link in the description below. Use it if you want a all-in-one platform. Okay, let's go into the rest of the altcoin charts, right? So here it is, ETH USD. There's your weekly chart. I know to the untrained eye, you may not be able to see what I see, but again, it's very, very bullish, right? Huge cup and handle formation. There it is. Perfect back test into support over there. Even if you consolidate around here for a couple of weeks, all the way into, February even, that would be incredibly bullish. If you just saw candles forming like this will create an order block that will have the momentum and power to get prices a lot higher. So holding up over there, that's looking good. Of course, I showed you on the other chart where you caught at your mid-range. Basically, you want to hold 3,500. That's the key level. If you look at Solana over here, similar, right? Huge cup and handle formation, already broke out. You now basically, you don't want to come much lower than 200, right? That's, for me personally, definitely the key level to hold, which is exactly where price wicked into that $200. You want to see Solana now range between these two levels, between 200 and 250, form a strong base, and then break through that level, right? So that's that. What else do we have? We can have a look at, let's go through some of the other lists. Let's look at some of the previously very, very strong coins like Sui. How's Sui holding up? Very, very strong, right? Closing back above the yellow line. That's basically when I went through this with the whale members yesterday, I said, of course you can wick down lower, but it's closes. You want to see the closes above the yellow line to continue to maintain that bullish structure. TON not looking as good, right? TON's come down quite a lot, losing the mid-range level over here. If it's unable to quickly get back above mid-range at $6.42, you're going to have to look down to 483 as the next area of support, which is going to be your range lows. Okay. Casper, we'll have a look at Casper over there. This one had a huge move, of course, straight to the top side of the trading range. Remember, you're establishing, this is probably creating a new trading range where this will be the new floor. That will be the ceiling, and you want to establish your positions in the discount zone, right? So if you are able to get Casper again, anywhere around that big level, which has been 14.3, that's the zone, right? That's the area of interest. Let's see Injective looking similar to TON, kind of losing that mid-range level. So you want to see the weekly closing above 30 to maintain that bullish posturing. NEAR, also still fine. NEAR showing a lot of relative strength, right? The coins that are holding above their 50% levels show relative strength. So NEAR still above that 50% level over there, looks decent. Phantom, massive strength in my personal opinion, up 5-6% on the day when the rest of the market is down. It's a highly volatile crypto. If you start to close this candle above $1.22, which is the white line, bullish, right? Bullish. If you do start to lose that level, you're going to have to look down towards the mid-range, which is going to be about 84 cents. But I would lean towards it's going to close above. Okay, say also still looking okay. High highs, high lows. Just a bit of a flush out over here. It looks kind of like Solana does in the sense that that's the key level to hold. You wick directly into that key level. Those were the previous tops. You don't want to see any closing candles below that 49-cent region. It needs to hold that and start to move up. Okay, let's go to just very, very quickly some of the meme coins. Let's go to, I see there's some requests on. Let me quickly show you WIF, which is currently the position that I'm building over here. Here's the WIF trade. I'm busy building a position right around this yellow line right now, so pretty much right at entry. If the bull market obviously continues with the same momentum, then clearly high low, major high low, we're looking at this as an order block that should get prices sent, right? So I'm continuing to hold that over there. We can have a look at Brett. I know there's a question around that. Also a lot of relative strength. We want to see no closing candles below this yellow area that I've just highlighted around 15 cents. You wick straight through it, immediately getting back up. Even better if you can close above 18, right? Similar to WIF, that would be creating the order block over here, which can prep for prices to go higher. So that's holding up. It's looking fine. Popcat, you know, I was wrong on this one. I said that I'm pretty sure that wick low is going to hold. It didn't, right? You went through that wick low. Strong support coming in at 96 cents over there. So that is definitely one that I was wrong on. Turbo, one that punished us for a couple of weeks, you know, when it was trading down here. But now so much relative strength, right? Huge move up. Yes, it's flushed all the way back down, but still trading near those highs, right? On a closing basis. Very, very, very bullish over there. So there's the WIF trade, just quickly highlighting as well. This is the latest one that I'm currently building. I really just want to see it hold up at the 50% level, which is coming in over here at $2.91. Needs to defend and hold that. I would especially like to see it getting above $3.36. I'll update you, you know, as this does unfold. And then I've recently started to look to add into these. I'm just briefly going to mention them. This is part of the Matt Fury's The Boys Club. Brett, Pepe, you guys know already have those positions. Andy, Wolf, and then a little bit of a flyer low cap is Bird Dog, right? So Bird Dog on ETH. The contract addresses have been dropped, of course, in the Whale Room Discord. For anybody that is in there, you'll find it over there. And then a final call as well for those of you guys that have not yet done it. Predict the price of Bitcoin to win one full Bitcoin. If you guess what the price will be by January the 1st, as the clock strikes 12 on Coinbase, if you're the closest guess, you'll win a full Bitcoin. You can see people are guessing right now, $112,000. 8 minutes ago, 122,000. And so the list goes on. There's links below. All of those links qualify you for sign-up bonuses simultaneously. And in order to participate, you have to actually use one of these links, right? So have fun. Sign up below. I'll catch you guys all on the next one. We'll reassess where the market is. Probably a little bit more of a shaky market for the next 24 to 48 hours. Have a great day and cheers for now.